What's up, everybody? Michael Silva here. Question on everyone's mind: should I buy gold in 2022? Well, in today's video, we're going to use a technical approach to answer that question. I'm going to give you some key levels on what to look for. Today's episode was brought to you in partnership by GOLDMining Inc. They trade on the New York Stock Exchange under ticker symbol GLDG, and they trade on the TSX under ticker symbol GOLD. To learn more about gold mining, make sure to stay till the end of the show. Let's get into this episode. Welcome back, everybody. We're looking at a yearly chart. We're going to start off on the higher time frames, kind of zoom in, and I want to point out a couple things here. One, some key levels: 1674, 1676, 1673. It was resistance. We broke through, and now it's acting as support. So let's just round it up. 1675, very important level of support to hold in the price of gold. We have an inside trading candle the previous year, and now we're trading with inside of that one. If we start breaking above that, that opens the door for more possibilities. However, what gold needs to do, it needs to start getting above the yearly close. It's not quite there. It's down slightly on the year as it stands. Now, if we zoom in a little bit on the monthly chart, there's a couple areas of support and resistance I want to lay out. You've probably seen this chart before. 1675 was a key level that I was getting ready to buy and was able to purchase right in this area, but we didn't close below 1750, and price came right back in. And you can see it's between 1835 and 1750 that we need to watch for a breakout or a breakdown of. If it starts breaking out, it opens the door to 1910, which is previous area of resistance. Okay, so it's really just range bound at this time. Now, if we zoom out further on the monthly time frame, this does present itself as a possible cup with handle formation. Another way to look at this, though, is the potential for a inverse head and shoulders, where you look at a shoulder, the head, and the other shoulder here. And you can see if you just connect these two and then draw it out, it's been a previous area of support, previous area of support, previous area of resistance, and now it's support again. So it's very important that the price of gold on this monthly time frame holds that 38.2 retracement level, but also to pay attention to is for a breakout of this down trend line that we see on this particular chart. Now, if we zoom in further on the weekly time frame, you probably hear me often talk about expansion leads to contraction. And as it stands right now, we expanded and now we are contracting very tightly into around, I'd say the point of this is around April, May, this area, it could potentially get even tighter. And this is going to be a very important one to watch, because we need to watch this for the breakout potential to go higher or the breakdown potential to go lower. Now, if we look at the daily time frame, you can really see here how expansion leads to contraction. You can see this peak to trough was about 15.6. This peak to trough was a little bit less at 14.8. Peak to trough 10.5. That's measured from this previous area support. You can technically go a little bit lower, but it'd still be less than 14.8. And then we get another contraction here, which only 6.9. So you can see if you were to draw the line, price is getting tighter and tighter, which allows for a better low risk entry on breakout, which we have not got at this particular point in time. So if we look at the daily time frame and we're wondering if we should be buying gold in 2022 and what we should look for to when to buy it, well, if you're going long, you want to see a breakout of this price pattern, right? So if it gets above 1875 or even, I'd say 1875, that opens the door to head higher. Now, if it starts breaking down, that opens up the door to go to around 1700 to 1675. Now, the price, it's just not ready yet. It's been consolidating now for quite some time. Remember, expansion leads to contraction. And another thing to look at is the Bollinger Band width. I overlaid the Bollinger Bands here, and you can see them, they're getting very tight. But you can see that right here on the width. And when Bollinger Bands get tight, what you'll notice is you get pops, boom, boom, boom. And this is just visual to show you that when it goes low, that's contracting. And when it contracts, it leads to that expansion. And we're coming into, this coiling very tight area here on this price pattern. As the Bollinger Bands are getting tighter, it seems that gold is going to be making somewhat of an explosive move here in the very near future. Now, if you look at gold over S&P 500, typically at the beginning of the years, from a relative basis, gold does outperform the S&P 500 up until really the end of the year, where stocks typically do better. Now, if you look at this relative strength line as of recently. You can see we did have a breakout of this little wedge pattern, and the PPO and RSI both have positive divergences taking place. This is relative strength, so at the beginning of the year, gold is outperforming the S&P 500, so it does match that seasonality chart that we just went over. Now, should you buy gold or should you buy the miners? Well, this is what I'm looking at as far as the miners go. I'm looking at relative strength between GDX and GLD, and you can see here on the weekly time frame there was support, then resistance, okay? So what I want to see is this relative strength line to get above this area right here. You can see there's been a lot of trading volume. And if it does get above this area, that means that the GDX or GDXJ could be a much better place to get leverage in a time where gold is performing better than the S&P 500. So for example, if this does break out, it opens the doorway to come around 0.36, 0.38, 0.40 up here from a relative standpoint, which could lead to a monster outperformance in miners over just spot gold. Now, if you take a look at, for example, the GDX or even the GDXJ, and the GDXJ actually, the sponsor of today's episode, GLDG, GOLDMining Incorporated, one of the holders is GDXJ. And what I want to point out here is in 2020, it made an explosive move after the bottom and ran all the way up here to around 65. And typically on these fib retracements, you get around a 50% retracement level. And you can see here as the price is retraced to 61.8 to around the 50% retracement level, it's been there for about 5 or 6 months. So it's basing out, and now what we need to do is start to see it get back above that 50% retracement level to head higher, which opens the doorway, obviously, to that relative strength line that I recently just showed you. And if you take a look at the price of silver, silver's been just in this price range as it stands right now, but it made also an explosive move, right, from this low to this high, and it's pulled back about 50%. It's interesting because it's been in this price channel, and if you really take a good look between the miners or silver, if you just overlay the GDX to the price of silver, they move hand in hand almost to just like the tick. It's absolutely incredible. So that's a correlation to potentially watch here. So should I buy gold in 2022? Well, with all those things that we discussed, we have seasonality on our favor, technicals in our favor. As long as we get a break, we need to be patient here, but it is looking good as it stands right now during this recording. All right, it's now time to talk about today's sponsor, GOLDMining Incorporated. They trade on the New York Stock Exchange under ticker symbol GLDG and under the TSX ticker symbol GOLD. You can go to goldmining.com to look at their forward-looking statements and for more technical information. What is GOLDMining Incorporated? Well, it is a public mineral exploration company that is focused on the acquisition and development of gold assets in the Americas. When this came across my desk, I was actually pretty excited to see this because the chairman of this company is Amir Adnani, and I've actually had him on this channel before to talk about Uranium Energy Corp and the uranium market. He is a true contrarian. He really does approach assets during times where everyone's looking the other direction, and you can see that here with this company. The CEO is Alistair Still, a very experienced leadership team across the board. Amir is one heck of an entrepreneur. He is the founder, president, and CEO of Uranium Energy Corp. He's the chairman of GOLDMining Incorporated and Uranium Royalty Corp. And he's the director of Gold Royalty Corp, all publicly traded companies. And if that's not enough, Fortune magazine listed him as ones to watch in the 40 under 40 category. One thing that I had noticed looking at the charts of these companies is they do offer up optionality and some significant leverage, which you need to be careful with. But if we just pull up a chart, for example, of URG during uranium's run up, I mean, just look how strong URG performed versus obviously the spot price of uranium, which I don't have here. But from the March 2020 low to, a year, just over a year later, a little bit more than a year, up 538%. Then from this trough to this peak, about 112%. So yeah, I mean, these companies can act as an optionality play, some potential leverage plays, which I'll get into here momentarily. But, leverage goes both ways. You just need to be careful, right? So Uranium Royalty Corp, look at the move that this made from 2020, March 2020 low to this peak right over here is 1,000% gain. And, then from September low to this peak, it was about 160% gain. So you can see some really wild swings during the midst of bull markets. Now, one thing interesting about GOLDMining Incorporated that I want to point out that I kind of recently touched on earlier, but GDXJ is one of the key shareholders of GOLDMining Incorporated, and this is obviously a well-tracked ETF. I'm constantly looking at the GDXJ and the GDX, but that's not the only one. Look at the remaining holders in this junior miner company, right? Junior miner, keep in mind. You have Sprott, you have BlackRock, Marin Katusa, Oppenheimer. I mean, just a list of great shareholders here for this company. And that's obviously a very important thing to see, is some very, very strong key shareholders. There has been some recent analyst coverage, and the analysts coverage has been fairly well. I would say, like for example, Haywood, they on July 12th and then also October 22nd, both reported this as a buy, and had a price target of 425. Keep in mind the risk, it's high, all right, but you're not going to get away from risk with junior miners. That's kind of, that's the MO. Junior miners are pretty risky. You just need to look for, why potentially these type of plays could benefit, especially during gold bull markets. And you have to look at the underlying assets, which we'll get into momentarily. But Wainwright here has a rating of a buy too as well. Their price targets were a little bit higher. We had a 575 on their one of their reports, and then the most recent one was a $6 price target. So pretty high price targets relative to where price is right now. If we look at the price chart, I mean, it's trading at, where was the last close? $1.53. So it's obviously a low price chart, and something to note here, just in 2022, it's already made a very monster run. And from a technical, and a lot of volume to support this move, by the way. So this type of volume kind of gives me the hint that this is institutional buying. So that's something to watch out for potential, future move in the spot price of gold, is you could see this thing really start to run. Now, I don't like just entering in after a large move. I want to see price consolidate, pull back slightly. It's been basing out, right? So it hit a peak of $3.30, and now it's pulled back down here, and now we're starting to see some strength. But relatively, we're just in this trading range, and it's very interesting when I talk about potential leverage plays or optionality. When you just pull a chart up of spot gold to GLDG, they look like very similar for one. This is a weekly chart, all right? But I want to just show you the power of optionality plays, but also, there's risks involved. So you need to be mindful of both sides, right? People get so excited about one way, but they don't pay attention to the other side, right? So looking at the chart of gold from this peak, or from this trough to this peak, gold made a 44.4% run. That was a monster run. However, when you look at GLDG, this made a 458% run. Now, during the drop from this August peak, gold came all the way down to around 20%. So keep in mind, leverage goes both ways. It works for you to the positive, and it can work against you. So you need to just be very mindful of all of that. But you can see a 70% decline from peak to trough here. So if gold does start breaking out of the pattern that we recently discussed, what kind of potential upside can come within this junior miner here? Now, a couple other things, if you look at gold mining stock performance, when the spot price of gold rises, the biggest leverage that we've seen was 30x. And that was, from January 2016 to September 2016. Very short period of time to see them go up 665%. Comparison to the spot price that rose 22.65. But you can see multiple times it did show that when gold runs, you definitely got leverage out of this optionality play here. So what makes gold mining a very unique optionality play? Amir, he is a contrarian, at least that's what category I'd put him in. And as a contrarian, you look to areas when other people are stepping away from them. And in simple terms, you're taking advantage of a bear market. So during the bear market, when gold was roughly around $1,000 an ounce, they went in and they accumulated gold resources in the ground. And they acquired these resources in the ground for less than the discovery costs. Now, as a pre-production company, they have a very large portfolio, if not one of the largest portfolios of a pre-production or junior miner company. For example, they have 16.2 million ounces M&I resource and 16.2 million ounces of inferred resources in the ground. That's typically something that you would see in a mid-tier miner or even potentially a major gold company. And as you can see here, Gold Royalty Corp has a 15% ownership. So GOLDMining Incorporated has an equity position in a very fast-growing gold royalty company. Another good reason why GOLDMining Incorporated could be a good optionality play is just looking at the value that they have and potentially is going to be unlocked. And really to kind of demonstrate this in a visual is just looking at this portfolio of companies right over here. Their total peak market cap from 2010 to 2012 during the bull market was roughly $850 million. Now, when the bear market ensued, that's when, the contrarian came in and GOLDMining Incorporated acquired these assets for only $81 million. So you're talking, they had a peak market cap of around $850 million during a bull market, and then they acquired them for roughly 10 cents on the dollar. So extreme value right there, especially if gold wants to continue in this bull market that we're currently in and start breaking further to the upside. Now, today, excluding the Gold Royalty Corp 20 million share position that's valued at $126 million, the other projects, or the enterprise value, is roughly at $128 million. Now, that's significantly less than it was 10 years ago. So you can see here that if we start entering into, once again, another bull market and gold starts to rise, you're really starting to unlock the value that these fell during the bear market, and you start to get the benefits of a bull market. And really, when you take a look at the overall portfolio, their main exposure is around three metals. It's gold, copper, and silver. And you could see that they have multiple different projects, and it's very spread out. And being that it's very spread out in different countries, this is also kind of doesn't eliminate it, but it reduces your risk exposure by having this diverse portfolio. Now, as I said, the top shareholders is the KCR Fund, GDXJ, Ruffer Gold, Extract Capital, you have Sprott Global, you have Maricatusa, BlackRock. It's very hard to find this kind of stuff in these junior miners, especially with the amount of value that could still be unlocked here. Another thing that I haven't mentioned is uranium. Yes, one of their projects gives exposure to uranium, and uraniums has been on a monster tear as of recent as well. So that means that the company, they have a strong balance sheet. They got cash. They have shares of Gold Royalty Corp that are worth north of $126 million right now. They have one of the largest portfolios of gold assets, 32 million ounces. For any junior miner, right? And as we previously stated, that's typically what you'd see in a mid-tier or higher. And then on top of that, it owns a pretty unique uranium project as well. So they got a lot of stuff going for them. I would highly recommend going to their website at goldmining.com to find out more information or download the presenter deck. There's been plenty of presentations that Amir has given. You can find those on that website. You can also go to GLDGnews.com to find out exclusive information updates for GOLDMining Incorporated. As always, be safe out there. Do your research, right? Don't just blindly hop into anything. Hope you all are having a wonderful weekend, and I will see you back here on the next episode.